Oil prices dropped over 8% in the first week of the new year, despite attempting to break higher throughout most of December. So in today's video, we are going to be looking at oil as it remains one of the most volatile assets. Hello and welcome back to our channel. My name is Daniela Hathorn from Capital.com. In today's video, we are going to be looking at oil to see how it's been performing over the last few weeks and what to watch out for in the next few days. So without further ado, let's get into the video. But of course, please like, comment, subscribe, and turn on your notifications. So oil prices, I said, performance throughout the first week of the year, pretty pessimistic, dropping around 10% for US crude with significant pullbacks on specific days of last week. We'll take a look at that once we look at the chart. But of course, first, we'll do a quick fundamental recap of the key themes out there. Now, I don't want to dwell on this too much because the main themes in the market, not just oil, but markets in general, remains unchanged from last year. We've done plenty of videos on this, which you can see on our channel. But looking at oil specifically, what we're going to do in today's video, we're going to look at a few reasons to be bullish on oil and a few reasons to be bearish, and then we'll go straight into the chart. So we'll start off with the bullish first. And one of the key themes, again, not just in oil prices, but in general market this morning, is this reopening in China. Now, we know throughout the weekend, most of those restrictions have been undone. And that means that we now have greater movement in China, but also internationally. Now, we know a lot of countries like the US and European countries, they have strict restrictions still on incoming Chinese passengers, but nonetheless, it gives the reason to expect higher travel over the next few months. So that is one of the key main reasons. Expect to see higher demand for oil from the airline industry, but also we have the Chinese New Year at the end of this month. And we're actually expecting to see around 70% of the travel that we saw in 2019. So a big recovery throughout what we've seen in the pandemic years, and that is mostly on the back of those restrictions being eased. So higher demand of oil for domestic travel, but also international travel. And not only that, but just the sentiment it's giving to markets this morning. We've seen a broad push in risk on sentiment, and we've seen oil up about 3% so far this morning on the back of this story alone. So one of the key drivers for that bullish sentiment is that reopening in China. Now, another theme that has been bullish on risk recently is that softer data from the US. Now, we saw the NFP data on Friday, actually coming in above expectations for the NFP data. But what we did see coming in below expectations was the average hourly earnings. We know that is one of the key drivers of domestic inflation in the US, wages and how wages have been performing. So the fact that we saw that below expectations and dropping does indicate that the US labor market is softening somewhat, and that helps the inflation rhetoric, and also that aids the dovish sentiment that the Federal Reserve will start not necessarily loosening monetary policy soon, but definitely following in the footsteps of December, where we see those smaller interest rate hikes and potentially stopping those hikes altogether throughout 2023. So that has been helping risk on sentiment, not necessarily directly related to oil prices, but definitely also helping move them in the right direction, because we do see that broader market sentiment coming in higher because of that softening US data. On that front, we keep an eye out for the US CPI data on Thursday. That is going to be another market mover. And we do see coming in below expectations again, expect to see strong rallies in equity markets, FX markets, especially that sell-off in the dollar. And we could also see that impacting oil prices, that weaker dollar then translating into higher oil prices on that reading. So watch out for that on Thursday. And then let's go now to the dovish reasons to be sentiment. And it feels like there's been so many throughout 2022, and some of those are still prevailing. one of the key themes is that we've started 2023 with the weaker energy sector in general, just that broader sentiment in the sector. We've seen nat gas really coming off from those highs. That was on the back of that milder winter weather in Europe and North America. We're expected to see that continue. So just that sentiment in energy, in the energy sector has been weakening. And of course, that impacts oil prices as well. Also on the Chinese reopening is one of the key issues, or one of the key concerns is what's going to happen with COVID. We've seen domestic cases increasing since these restrictions have been laid back. Now, what's going to happen elsewhere? Are we going to see COVID increase not only in China, but also in the rest of the world as we see more international travelers? Yes, they have to have tests before coming or before traveling to another country, but what if they're symptomatic and then they develop it later on? So there's all these concerns about what's going to happen with COVID. And of course, that does have a little bit of a negative impact on oil prices, definitely in terms of sentiment, but also with sentiment, we have those key concerns about recession, because not only is weaker data in the US and worldwide good for central banks in the fact that they'll start to unwind their tightening in monetary policy, but it also risks recession getting out of control and the Federal Reserve and other central banks not being able to achieve a soft landing. So it is a little bit of a double-edged sword here. What's going to happen with recession? Does that mean there's going to be slowing demand for oil in the immediate future or in the next few months? And of course, that is going to have an impact on oil. And then the last thing to keep an eye out for, and this is definitely oil specific, is the fact that the market is currently in contango, which means that the front month price is below longer dated deliveries. And that just essentially means that there's a little bit of bearish sentiment in the oil market. The nearest date for delivery is below the longer dated ones. So essentially people are okay putting off delivery to longer dates, and therefore that bearish sentiment on oil. So those are the key reasons to be bearish on oil versus the key reasons to be bullish that we've seen just before. Before we get quickly into the chart, let's take a look at a few key levels to keep an eye out. On the top side for resistance, we have 77.48, that is high from January 4th, 81.52, that is the high from January 3rd, and 83.26, that is the high from December 1st. On the downside for support, 72.87, that is the low from January 4th, 72.60, the low from January 5th, and 70.24, the low from December 9th. Okay, so here we have the daily West Texas Intermediate, also known as US Crude chart. This is on the TradingView platform because we've been keeping an eye out for this pattern for the last few months, and I want to keep an eye out on this in today's video as well. So let's quickly do a bit of a recap of the start of the year. As I was saying there at the beginning of the video, Tuesday and Wednesday last week, really seeing that retracement take hold in oil prices. That was after spending most of the latter part of December building those gains, building those higher highs and higher lows, culminating in breaking above the descending resistance from those highs on November 4th. Now, I don't know if you've been following these videos for a while now, but I've been talking about this wave pattern for the last 6 or 7 months now. And this started back here in March. And essentially, I don't want to dwell on it too much, but it's this theme that we've been seeing in oil prices where we see a strong rally followed by an equally strong resistance that then attempts to break higher once again, but finds resistance along the descending line from that previous high. We have a few attempts of breaking higher, and then once we actually manage to break above that area, we see a good period of bullish momentum followed by again another high, and then the same pattern where we see attempting to break higher a few times before actually managing to do it and then breaking to another high. Now, I do have to say throughout every wave that we've seen, the bullish momentum after the breaking of the descending trend line has been weakening. As you can see here, back in October, we broke on the 26th of October, and then we saw the next high on the 7th of November. Similar pattern as well with the most recent one. We saw breaking that resistance there on the 21st of December, and it looks like we may have potentially seen a new high here on the 3rd of January. So the time between each of these waves has been shortening. Now, I'm not saying that this is necessarily a new high. You can see I've put the arrow here just to point it out. It just suggests that if we do believe the pattern continues to unfold, it could be the next high in this wave, which would be the sixth wave, I believe. So if that is the case, expect to see from here on out that attempted build higher. In fact, we're seeing that today, up about 3.2% at the moment, but also finding resistance, which we will at some point start to form that descending trend line. It can be a little bit wider, a little bit narrower. But I'm just saying, again, I'm not saying that this is necessarily happening. It's just something to keep an eye out. It's been a recurring theme throughout 2022. And it looks like it could be, again, that every time that we see that strong bullish momentum, we then see a reason to revert lower, and again, quite strongly. So keep an eye out for that. But things to watch out for is from the lows here on January 4th, we came to rest actually on that descending trend line. But this time it wasn't acting as resistance, it actually acted as support, as you can see here. So that is something key. That hasn't happened very often. In fact, I don't think it's happened before. Every time that we've broken to a new high, we've actually come away from that descending trend line. And the next low has been a while away from that area. But it does seem like we may have started to undo some of that momentum, starting to see that buying momentum coming in. Also, something to keep an eye out for is that SPR replenishment price range. If you've seen the 2023 outlook video for oil on our YouTube channel, you'll see I mentioned this. This is essentially the area where the Biden administration is willing to repurchase into their SPR replenishment. So between 72, I believe, and 63, that is the area where they are considering to replenish their reserves. So we may see some buying support coming in there, institutional buying support from the SPR replenishment, and that has been keeping so far prices away from that area. We dipped into it here at the beginning of December, and we saw that strong rally out of it. Again, we found support above it for now, but we may come into contact with it once again. But in terms of the outlook, this week outlook, it does look like we are going to be building on these Chinese reopening news, but I still think we do have some bearish pattern to unfold from those highs in 2022. I still think that we have further weakness to come. As I said, there's a lot of fundamental reasons to be weakness, but just in general, I just don't see markets yet really convinced that there's been a turn of momentum and that we're going higher from here. We are going to attempt to break higher. We are going to attempt to build as we have been doing throughout the year. It's been a very, very volatile market. I don't expect that to change at all. But for me, the key area to watch out for is this should be, if you are a seller, this should be your stop loss. If you see it going above the high that we saw here on the 3rd of January last week, I would say then exit your bearish trade. This for me is the key area that I'm going to say, okay, I'm bearish. I'm going to play out this the retracement in this bullish move. But if we break above this area, I'm no longer convinced that this is a bearish market in the short term. So that is the trade setup that I would see with oil at the moment. But as I said, very volatile, and there's good enough reasons to be bullish and good enough reasons to be bearish here in this market. That is it for today's analysis on US crude. Thank you for watching, and don't forget to subscribe to our channel.